Okay, look, all over the internet, I see people making crazy returns in the stock market off of options, specifically call options. And I like making money, so today we're going to see if I can turn $500 into some crazy numbers with call options. So I'm giving myself 5 days to try and turn this $500 into a much higher sum and show you guys my whole process and hopefully teach you guys that we can make some money along the way. You guys are gonna be able to see all of my trades. I'm gonna walk through exactly what I bought into, why I bought them, and hopefully you guys can follow along and maybe see what I'm doing. But first, it would probably be helpful to know exactly what a call is. Okay, a call option, or as I'm gonna refer to them in this video, as calls, they are a contract between a buyer and a seller for the right to purchase 100 shares of a company at a given agreed upon price called the strike. The buyer side of the contract, which will be all of my positions in this video, pays a fee for the right to every contract, sometimes called the premium. The price of the premium is going to move for a lot of different reasons, but all you guys need to know is that I'm going to try to buy the premium at one price and then sell it at a higher price. Buy low, sell high. And so if the idea is just to buy low, sell high, why not just buy stocks, right? Well, the thing is that this premium that you pay is going to give you a little something called leverage. So theoretically, your upside for $500 is much higher, but the turnover to that is your downside is also going to be a lot higher. And it can get more complex than that for, again, more reasons that don't really matter. For the purpose of the video, it's all you guys need to know. Without further ado, let's make some money. Starting with day one, I went online and my goal for the trade today was to find a company I thought had an irrational dip that was based on pretty much nothing. And so I ultimately landed on a company called AMD. I saw a morning dip and bought in on a contract that was $120 for its premium. And unfortunately, the challenge was already off to a really bad start because only 5 minutes later, this contract was down big. But I stuck to my gut and I did something that I probably would have gotten burnt on, and I probably should have, but I doubled down. I ended up buying in for 2 more contracts at a price of $77 a piece, bringing my cost basis down a lot from that $120 initially, ultimately bringing my total cost to $274.09. And with almost $300 invested now, I was watching the chart like a hawk. The chart bounced around for a while, moving up and down, not really doing a whole lot. But luckily my suspicions were correct and the oversold hypothesis ended up being right on this trade. It bounced back up and well above my average cost. I ultimately sold out of today's trade at $284.91. So that is a profit of $10.82 for day one. Already, I'm realizing that the psychology is going to be a big factor in how I trade. I was pretty stressed doing this. I watched it too much. And I think going forward, I'm going to try and just set a take profit and let it ride from there if I'm already in the green. That way I can avoid all of the psychology behind it. This trade today felt hasty and honestly too much stress for only 4% returns. But to be fair, profit is profit and staying in the green is how I'm going to win this challenge. I want to keep this green going and I'm going to start doing research for my day 2 trade. Today was bad. Like really bad. Let me explain. So I decided that my trade for day 2 was going to be on Apple. I saw they'd been on a run the past week and I was hoping that they would go up more on this news. I was wrong. I'm gonna rip the band-aid off. I lost a lot. So let's walk through it so you guys know what not to do. I started the day off buying 2 contracts for $88 a piece at a strike of $220. Currently, it was trading around $214 when I bought it and I saw that it dipped a little bit and I thought, kind of the same thing with the AMD trade, that it was just an overreaction, like maybe a morning sell-off or something like that. Instantly, I was in the red, and this contract expired on Friday, and it's currently Tuesday, so I had to do stuff, and I had to flip it today. I decided it would be a good idea to double down. I bought 2 more contracts at a price of $76 a piece to try and lower my cost basis. It kept dumping. So, not only did I double down with the previous contracts, I tripled down. I bought 2 more contracts with $73 a piece being the premium. So I'm pretty deep in this challenge. I'm getting near my max limit, which was $500. But it kept dipping and I decided once again that I was going to buy more. I ended up buying one final contract for $69. So I was in deep this morning, like $543 deep, which I already broke one of my rules for this challenge, which was to stay at $500, and I was at $543. In hindsight, a lot of things about this trade were really stupid. My attempt at lowering my cost basis just ended up being an attempt at catching a falling knife, and I got burnt every single time. And I held these contracts through most of the day, hoping for any sign of life to recoup my losses, because at one point, all of these contracts, these 7 contracts I have now, they were worth, I think at its lowest point today, like $25 a piece. So that was pretty bad. At one point, I was down 75%. I wanted to wait for at least $1 of profit. I just wanted to get out of this trade. I knew as soon as I had finished buying that last contract that I was in way too deep, and that I had leveraged way too much on something that clearly was not going my direction. I kept doubling down and quadrupling down. I ultimately accepted defeat with these 7 contracts at a price of $35. This created a pretty big loss, and I ended up selling out for just about $240. So just in one trade today, I lost almost half of our portfolio value. And I tried to hedge out of this by selling a couple contracts at a time to recoup my loss and see if I could almost dollar cost average my way out of this loss. But I ran into a problem called the pattern day trade rule. The pattern day trade rule is a rule inside of the stock market that accounts that either have margin enabled or are worth under $25,000, which in my case is both, can only place 3 trades in 5 business days. And considering I had the trade from yesterday and then I already had a trade from last week, I couldn't exercise these I couldn't sell these contracts at different points. I had to sell all 7 at once, which was a lot harder to do since I couldn't average out. Essentially, it was all or nothing, or my funds would be frozen and the challenge would be over. So yeah, day 2, pretty bad. But I'm going to look at some more stuff later tonight. I'm going to buy into something, and I'll let you guys know. I think I'm going to try swing trading this time because market closes pretty soon here. So I'm going to see what I can buy into. I'll let you guys know in day 3. Okay, so it is later in the day, in day 2, and I just want to talk about what I just bought into and how it's going to be my 3rd trade of this challenge. I decided I wanted to trade on a ticker called VOO, which just tracks the S&P 500. It had kind of been dipping all throughout today, and so tomorrow is a market holiday, but I figured that since it's the S&P 500 and there's a lot of other companies besides Apple inside of it, that they will probably bounce back up on Thursday. I don't have a great reason for why, but again, this is kind of gambling with extra steps. So I ended up paying $155 for this contract, and we're going to see Thursday morning market open if I can get a quick sell and avoid the pattern day trade rule as well. Okay, so it is Thursday. It's the 4th day of the challenge right now. I just sold out of my current position for a nice 23% gain, which felt really good. Luckily, right after I sold, market started to dip a little bit. The calls ended up being worth a lot less. So honestly, not a lot of skill in that. That was a lucky play, but 23%, I'll definitely take it. Not enough to offset the horrible trade that was Apple, but we still have one more day, and I still have 1 day trade left. So I think I'm going to go in on one more trade, maybe NVIDIA, but I'll let you guys know, and we're going to see how that turns out. Okay, so it is later in the night on Thursday still. I ended up taking that NVIDIA trade, decided to buy the dip, and I bought him for $215, and almost 5 minutes later, I was up almost like $80. And so I figured, I was like, okay, this is kind of a crazy correction. So I just said a take profit and kind of let it be and let it roll. And then it ended up hitting that take profit. So we ended up selling out at a profit of a calm little $7 in about 30 minutes. So that was a good trade. I feel good about that. We're still not close to overtaking the Apple call that blew up this challenge. So we're going to see if we can make one trade tomorrow morning, something quick, to hopefully make our money back. But I'll let you guys know what I decide to choose. I'm not sure right now, but I'm going to do some research tonight and see what I come up with. So it is currently Sunday, the day this video is going out, and I know that means that we skipped Friday, and that is because the pattern day trade rule is still in effect. And so I was not able to make a trade on Friday that I could have sold out of in the same day before this challenge ended. Speaking of the challenge ending, I will absolutely be giving this another go. I am really confident we can get a profitable week doing this. I just made one really stupid trade. So subscribe if you're interested in that, but let's get into the results and more importantly for you guys, the 3 lessons I have. So obviously we started with $500. So the total result after this challenge was $286.70. This means we lost just about 50% of our challenge money. And that came from a total of 3 decent wins and 1 massive L. But they say our losses teach us more than our wins. That was just a really expensive loss for me. Enough whining about the losses, let's get into the lessons. Number 1, right off the bat, don't fall in love with a trade. This is the mistake I made with Apple this week. I was really confident in it, and when it wasn't moving my direction, I tried to buy in even more. And that obviously ended up being a huge mistake. Now, of course, with the AMD trade, I did buy in more to hedge and lower my cost basis, but the difference is that I wasn't over leveraging myself on an asset that's already so volatile. So keep that in mind if any of you are going to look into call options after this. Lesson number 2 has to do with the expiration date. Now I know in this video I didn't talk a whole lot about when these actual contracts expired, but you've been able to see them on all of the contract images I pulled up. What I got from this challenge pretty much is that a longer out expiration date, meaning it is a further date until expiration, generally is not as affected as overnight trading and it doesn't lose premium as fast. So I think that's good, and it might allude to the fact that maybe a better call option trading strategy would be to not trade them all in one day, but more so to look at a longer date, like over a span of weeks or months. Now, obviously that comes with a higher premium that you have to pay, but obviously less risk. Number 3, the biggest one, because I assume most of you guys do not have $25,000 to invest with. To gamble with, but it is to be cautious of the pattern day trade rule. That is really what ended up screwing me in this challenge where I couldn't hedge out of Apple and I couldn't make a Friday trade and I had to get crafty with the S&P 500 trade doing a swing trade across. So maybe that is a better strategy as well, doing some swing trading with longer dated call options. But there you guys have it. Did it go how you expected? Let me know in the comments. For me personally, it did not go how I expected, but it was a learning chance. Again, like I said, I'm going to do this again, and actually next week's video will be doing this, but in the opposite direction with puts. So stick around for that too. If you want to trade some calls for yourself inside of Robinhood, get started with the link in my description. If you want to learn more about call options, personal finance, or investments, then make sure to subscribe because I'll have videos coming out on that very soon. And finally, if you want to learn more about what exactly is inside of my Robinhood portfolio as a 20-year-old, click this video right here. Thank you guys. Have a great day.